Hello and welcome to my morning note. There's great excitement about US stocks at the moment, but let's take a look at a market which is actually rather significantly off its all-time highs, and that's gold. Now, it's no secret that gold has been a great investment for anybody who bought back when stocks were peaking in 2000. It's multiplied many-fold since then, but it is now very significantly down on a high which was set more than a year ago. Is this an opportunity to buy, or is the high for this cycle now in? With me now to attempt to answer that question is our commodities correspondent, Jack Farchy. Jack, let's start by taking a look at how the gold price has moved since 2000. Obviously very impressive, but it really, plainly, that upward swing, that upward trend does seem to be over, at least for now.
At least for now, certainly.
How would you go about working out whether this is the end of a cycle or a buying opportunity?
Well, that is the great debate in the gold market at the moment, probably for the first time since I started covering the gold market about here.
Right.
There is a genuine debate that has really divided the market as to whether this big cycle is over or whether this is just a dip in the longer term uptrend. Right now you can see the price is hovering around this kind of support level at around mid 1500s, and certainly there are people out there worried that if it breaks below that, then we could see a very significant fall and we might be talking much more loudly about the end of the bull market.
Now let's take a look at the guts of exactly who's buying and who's selling these things. What we're looking at here is ETF holdings.
Yeah.
So people who are purely holding this as an investment, they're not making jewellery out of it, and they're not central banks. And also at speculative short positions.
Yeah. So this is all the investors in the market, and you can see that the ETFs, which are these red bars here, and when they're above this line of zero, there's inflows and people are buying gold through ETFs. When the red bar is below the line, that's outflows and people are selling gold through ETFs. This fantastic period of accumulation over years and years and years, when ETFs have been a steady source of demand for physical gold in the market. Then last month there was the biggest outflow ever.
Now, in many ways, the secular rise we've seen recently may well be down to ETFs. These are a new vehicle.
In part, yes.
Is there a risk that that whole trend is now played out?
I mean, I think everyone will agree that if this continues for several more months or for years, then that will certainly mark the end of the bull market, because we've had this has been a new source of demand in the market, this month on month, every month, more physical demand for gold. If that becomes, not only that demand goes, but it becomes supply, that's a very serious problem for the gold market.
Gold really needs to be looked at in context of other assets. So let's take a look at gold compared to the Dow Jones Industrial Average, a methodologically indefensible index in my opinion, which is, you may have noted, at an all-time high, an index that gold investors seem to care about very much. What is the story we're seeing? What is the story we're seeing here?
Well, this chart really poses the big question, which is, was this the 2011 peak for gold, at least? Was that the turning point in the market? And are we now in a phase where the global economy is moving into recovery, real interest rates will start rising, and equities will outperform, gold will underperform, and this chart will carry on going down? Or, as some gold bugs believe, we're going all the way back to a 1-to-1 ratio, so yes, at least based on today's Dow, a $14,000 gold.
I mean, basically hoping both for a gold bubble and for another catastrophic fall in US stocks.
Yeah. I mean, I think what we can say is the immediate reason to buy gold tomorrow, the fear that the financial world is going to collapse, seems to have dissipated from the market since Mario Draghi promised to do whatever it takes, since the debt ceiling fears have subsided somewhat. Those kind of immediate fears in the market have dissipated and people have stopped saying, I need to own gold right now. The longer term reasons to buy gold, what does all of this central bank balance sheet expansion mean for inflation in the longer term? That's all still there. And once people start thinking about that again, then who knows, gold could come back into favour.
Okay, Jack, thank you very much indeed. I find it very hard to come up with a better summation than that, and I also find it very hard to come up with a clear conclusion of where gold is going. Ultimately, it's very similar to the stock market. If the economy really finds traction, then stocks can make true, strong new highs and gold can go into a clear reverse. But that remains a big if. That remains the question to be answered.